Even the best traders, most successful traders are constantly working on this part of their trading. Number one, you want to recognize your negative behavior patterns from journaling, okay? Alright guys, welcome back to another video. In today's video, I want to discuss the 4 keys to success. Whether you trade Forex, whether you trade commodities, whether you trade indices, it doesn't matter. As a whole, I feel like these are the 4 major things that make successful traders and breed profitable traders in the long run, okay? So without further ado, let's jump right into it. Number 1 key to success in trading in general, I would say, is a proper system or strategy to get into the market, okay? So it's important that everybody understands that every single strategy works, right? Whether it's a retail concept, whether it's smart money concepts, doesn't matter. Whatever you learned is probably a strategy that actually works, but not every strategy is suitable to traders based on their personality and based on their limiting self-beliefs, right? When it comes to any strategy, you have to believe that it works in order for it to work. And you have to understand that every single strategy incurs wins and incurs losses. Trader A may not be able to trade breakouts, but trader B is able to trade breakouts, right? Maybe trader A's strength is trading pullbacks, while trader B's strength is just trading continuations, right? So it really depends on the trader and their personality and what suits them best. I'll always stress that it's important to find a strategy you like that makes sense to you, right? The things that certain people teach may gel with the way you view the markets. Certain things people teach will not gel with the way you view the markets. It might be a little too confusing. Like some people I know that want to get into the smart money space go straight to ICT, and they have a hard time digesting the things that he teaches because there's so many little acronyms to learn and so many little intricacies of the way that he teaches his trading style, right? It doesn't suit everybody, which is understandable. It's important to know that you have to focus on trading a strategy that you feel comfortable with. Now, the most important part about finding a strategy or system to get you into the market is to avoid hopping strategy to strategy, okay? This is what kills new traders. This is a hurdle I had to get over in my learning journey in the beginning. If you keep hopping strategy to strategy, you'll never find any sort of consistency because you're changing the way that you're entering the market every single time you enter a trade, right? What you want to do is stick to one strategy and get a big set of data based on how you enter the market using that strategy and tweak it to your liking and see how you can improve on it, right? There's no way you can achieve profitability or some form of consistency if you're changing the way that you get into the market every single time. That would be like a Formula One driver changing his car every single time he enters a race, right? You can't change the entire make of how you're getting into the race because it's drastically going to affect your performance in the long run. Moving on to the second key to success, which is journaling and testing when you're learning a system or strategy. This is a step that a lot of people skip. This is a step that I personally skipped early in my journey. You guys need to understand that journaling will only show you where you're going wrong and what your strengths are with the strategy that you're learning, okay? So collecting data involves taking screenshots of a trade beforehand and a trade afterhand and documenting it all together week by week, okay? So as the days go by, you want to be collecting before and after pictures of your trades and keeping them in a nice little folder. Whether you use Microsoft Excel, whether you use Notion, these are just little ways that you can journal all your trades and keep track of your performance week by week, day by day, month by month, okay? When it comes to journaling and testing, what you want to do with a strategy you learn is you want to test it because it gives you confidence in live market conditions. Everybody knows about the backtesting feature on TradingView. There's also software you can use to backtest that tracks each trade as you go by. Super important to backtest. It gives you a ton of confidence in the strategy you learned. You're going to take losses backtesting and you're going to take wins backtesting. But most of all, you're seeing your progress with that strategy without having the factor of time waiting for the trades to play out, right? You're seeing how the strategy would play out if you had been using it back in time, right? So the idea is to emulate the same way you would backtest in live market conditions, right? So there's no element of time when you're backtesting, and that's the major thing that you're gonna have to get used to on live markets. So while you're backtesting, those same trades you took and you saw a good entry based on the strategy you learned, what you want to do is emulate the way you backtest on live markets, right? There's a different psychology when you're live in the markets, and that's the only element that's missing from backtesting. Moving on, I would say that the third key to success in trading comes down to risk management, okay? You want to learn how to calculate your risk based on your invalidation point, right? So using TradingView as a tool to see what's going on in the markets, it's an accurate way to measure the pip counts of whatever instrument you're looking at, okay? So whenever you enter a trade, you have to set an invalidation point. Whether that's your stop loss, whether that's a pending hedge order, doesn't matter. You're still gonna have to calculate what your lot size is based on the pip range to your invalidation point, right? So if I want to put my stop 30 pips above my entry and it makes sense, I'm putting my stop above a high or below a low, you want to enter the pip count into a calculator, and that will help you calculate the proper lot size to use based on the amount you want to risk on your account, right? Super simple stuff. A lot of people overlook it. Some people don't even bother doing it. It's important, okay? I downloaded a app on my phone, iOS, called Stinu. It costs about $5 maybe. That's a great way to calculate your risk. You punch in the account size, you punch in the amount you want to risk, and then you punch in the pips, and then you punch in the pair, and then everything gets calculated for you. If you want to go the free route, Baby Pips also has a very good lot size calculator. Definitely recommend it to you guys. Another important thing in risk management, I would say, is knowing when to scale up your risk as you create a buffer. So as you accumulate wins and you start to see some profits on your account, it's good that you learn how to scale up your risk a little bit, okay? And vice versa. You want to scale back your risk as you take consecutive losses. What this is going to do is it's going to help you compound your account, and it's also going to prevent you from losing your account, okay? So be aware of when you're going on winning streaks, when you're going on losing streaks. Set a reminder that you should be scaling your risk up as you go into more profit on your account, and also set a reminder that you should be scaling your risk back as you take consecutive losses on your account, okay? Now, the final most important part of risk management is properly managing your active trades. So as your trade goes into profit, you should be looking to find ways to mitigate risk and cut losses early, right? What I tend to do is I set my trades break even as they go 1-to-1. So I move my stop loss back to my entry point as soon as I go into the same amount of profit as the size of my stop loss or the size of my invalidation, right? So going back to having a 30 pip stop loss, for this example, if I'm in 30 pips profit from my entry and my stop loss is 30 pips, I want to move my stop loss to break even, right? What this does is it gives me a risk-free trade, like a free shot at the market, okay? That's just one example of properly managing an active trade. So moving on to the fourth key to success, this is gonna be self-awareness and psychology, okay? This key is gonna be constantly in improvement, constantly in adjustment. Even the best traders, most successful traders are constantly working on this part of their trading. When it comes to psychology and self-awareness, number one, you wanna recognize your negative behavior patterns from journaling, okay? So some of these patterns involve traders who move their stop loss when you go into some drawdown, or they don't take profits off the table as they're in profit, or they scale in too much into their positions, or they look at too many pairs, right? So sometimes these can be negative effects on your trading as a whole, and it's important to recognize when these negative behavior patterns come up, okay? Take note of them, write them down, have them on your board by your desk. It's important that you see them often, because sometimes when you write these things down, it's easy to avoid them in the future, okay? As it relates to self-awareness and psychology, you guys have to practice patience in the market based on how you're feeling. So depending on what's going on in your life, the day you wake up, it may not be a good idea to immediately hop on the charts. Sometimes life can be stressful, and this has a negative impact on your trading as a whole. Understand that not every day you come to the charts is going to be a good trading day for you, or even for the market, right? You can't control what's going on in the market. You can only control what you can do, right? So some days are not the best days psychologically to enter the market, whether you didn't get enough sleep, whether you had an argument with your spouse, whether your kids are being crazy, you know, little things, little factors. These are things you have to take into account when you're hopping on the markets each day, okay? As it relates to self-awareness, you guys need to know when you're becoming fearful in a losing streak or being overly confident in a winning streak. This is a normal thing to happen. This is how the human mind works. We associate pain with loss and pleasure with winning, but when we're in the markets and we're trying to execute the strategy or system that we learned, there's a random distribution between wins and losses, okay? We don't know what it's going to be. We don't know if we're going to hit a losing streak or a winning streak. The only thing we can control is our entries and how we manage our trades, okay? So it's important not to be fearful in a losing streak. When you do go through a losing streak, you should reflect back on the data you collected from journaling and backtesting. What this is going to do is it's going to reassure you that your strategy does work over the long term and that short-term losses shouldn't affect your confidence in the market, right? The opposite's true for winning. If you're going on a winning streak, sometimes it's good to just take a break. I have a rule where if I make 5% in a week, I try to just scale back risk or just stop trading at all. These are little rules you can set for yourself. Number one, it's important as it relates to self-awareness and psychology to know when you're fearful or overly confident, okay? To be a good trader is to remain neutral somewhere in the middle, okay? So try not to lean too far to the left or too far to the right as it pertains to trading week by week. This was a short and sweet video. Hopefully you guys gained something from these 4 keys to success. This is free general knowledge I see all over the internet. I just thought I'd pack it all together for you guys. If you made it to the end of this video, thank you so much. I would appreciate it if you like, comment, and subscribe. Channel's still small, channel's still growing, but we're gonna get there. We're moving on up. If any of you are looking for some free resources, I do have a free Telegram community. You can talk to me, anyone in my team in there, free of charge. Links in the description. If any of you are looking to join the Signal Room or join the team, all of the links will be available in the description below. Thanks for watching, guys. Happy trading.